Good evening. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up, and this is for Thursday evening, the 22nd of October, 2020. What a day. Interesting. Now, how do you play the market going into tonight's debate? Because this is going to be Muhammad Ali versus Joe Frazier. You know that. The president's going to be Muhammad Ali coming out swinging. Joe Frazier is going to be the bulldog at the other side. Maybe. I don't know what he's going to be. We're going to find out, but I'm pretty sure of who the president's going to be. And if the president isn't, that would really hurt him. He's got to come out and he's going to go with everything he's got for this last debate. Let's face it, we're after tonight, 10 days away from the election. We're not very far away, and the president's down in the polls. So how do you play something like that? Well, number one, why? That's the first question. I think you wait, you see it, and if you're trying to trade during it, you do understand the algorithms are going to be all over that market. They're programmed, they'll be looking at key phrases, words, why are you trying to step into that game? I'm not stopping you, but not something I'd want to do. Everything else doesn't matter. Tonight, it's the debate. After that, everything else matters again. I know it's crazy, but it's how these things happen. In the market, I don't think you'd disagree with me that XLK has been sliding to the downside. The trend is down unless you get back over 120.57. But even if you get over that, all you do is break the downtrend. You don't start an uptrend. Look where the market's fighting, that 18-day average. That's about 3 days in a row where you just keep fighting it. Now, if the market lets go from here to the downside, a possible number in a moving average support is 111.80. But there's a Bollinger Band here also, and that's going to be ahead of it at 114.16. So trend down, bias down since the close was under the 18-day average. Knocking the trend out is 120.57, and momentum down. If you took the name off, you didn't know there was a debate tonight, the bears have control, not an oversold market, a downtrending market. In SMH, the correction has taken place. Markets that correct, and if you take my charting course, you'll learn this, often they go back to the 18-day average of closes. I don't care if it's on a ETF, a SPDR, an individual stock. I've done my research, I believe that. Now, you don't have to. Does it have to be the 18? Some trader use a 19. I've seen some use a 20-day, a 21-day. I'll let you do that. I'm very comfortable with the 18-day average of closes. And what is the market doing? Well, the swing lines in a downtrend is defined by lower highs and lower lows, but the filter on it, which is the bias, you haven't closed under the 18-day average. So the bias is up. The two negate each other. Momentum is down. We had an embedded reading right here. Embedded means the red and the blue lines have gotten over 80 for at least 3 days or more. When it's lost, the goal is, unless it gets embedded again immediately the next morning, the odds favor that the pros are going to be sellers looking for the 18-day average of closes. Next day, it didn't even move. Now you're working your way. Guess where you went? That's what I think happened. I think they're out, and they're now observing. That's called a contra-trend trade, by the way. I call it, and I defined it for my paid subscribers on my futures, a lost embedded slow stochastic trade. It's hard to keep saying that, but it's what it is. Now, you've got a lower low, higher high, lost embedded, slow stochastic trade. Therefore, how many days do you have of that? You lost it right here and you kept it down today. So what do I think the market's going to do? I think the market's going to make a run for the 18-day average. Where would I be wrong? Over the highest, most recent high. One tick over it. That's what I think the market's going to try to do. XLE negated the downtrend today. You've been working in a downtrend in a pipe. You've heard me say this, and my subscribers know I've been saying it. When you get Bollinger Bands that narrow in like that, they are often accompanied by choppiness, churning. You get your brain blown out. Why? Because you're looking for the follow through. Darn it, it didn't get to the Bollinger Band. Oh, it's going up, it's going to the top again. Oh God, it didn't go there. The reality is, because you've narrowed in so much, the forces fighting each other just churn. And it'll eventually break out of this with a trend. I wait for the trend. I've learned to step back and say, you know, I'm covering about 40 charts a day. This is one I don't want to do anything in right now. What's so wrong with that? On the NASDAQ, I've been looking for the 18-day average to be hit. Ta-da! The bugles are blowing. Got it. From the lost embedded reading. I'm neutral now. Where did the market finish? The settlement was over the 18-day average. So this whole contra trend trade, that lost embedded slow stochastic, hit its number, and now I'm neutral going into the debate. I think the debate's a big event. You may not, and I'd rather be wrong that it's not. But I've learned in my trading career, especially in futures, where you have to deal with 90% leverage, not what you're dealing with in these markets, which can be either no leverage at all or the most is 50%, that you avoid what you can avoid so you don't get run over. Well, that's how I trade or make my recommendation. Maybe I should say that. That's how I make the recommendations to my subscribers. You know why I want to say that? Because what I'm doing is for them. I'm running a business for them. That's how I make my living, running a business for my business. And that's what it is. I love doing it. If you watch me, I think you know that I enjoy what I do. Lower highs, lower lows, right into that number. What is the trend? Down. So is it okay to sell this market? Well, I think the pros are selling at 64.68, tight stop 65.19, and if they get right down here is where the market objectives are. That's a different type of chart than the others we just looked at. GLD. Remember I told you get into these pipes, as I call them? What'd you do? You went up yesterday to the Bollinger Band. What possibly changed between this market trying to get up and run and coming right back to the 18-day average today? It's a big drop. Guess what? That's what a chart's about. Nothing. I'm warning you. You get into these pipes, you got to be careful of them. The miners are bearish. You now have lower highs, lower lows, and you're under the number. Now, the first support level, the market is paying attention to, the 100-day average. But if the pros can push on this, then 38.05 becomes a potential target. What breaks the downtrend? Getting over 40.41. I do think the bears are in control, and I think they're pushing on that market. TLT. As you watch me, what is the one thing I say when the first time you hit a Bollinger Band? Top or bottom, in unison. I think the pros are taking the money off the table. It's exactly what I think right there. Oversold. By the way, I don't know how you got short that market. I'm not saying that I could have been short that the way I teach charting, but it's hit it, and if they are short with whatever methods they have, that's where I think they're stepping out. And yesterday, the first challenge of the upper Bollinger Band in the euro, what did it do? Backed off, overbought market, not a trend. That's what I think goes on. If you'd like to learn these techniques, I go through them in detail every afternoon. At approximately 4 in the afternoon, I record about 37 charts. The idea here is to give you trades for the morning, but it's more than that. It's education. There's nothing better than an educated person on charts. That's my opinion. I don't agree that the fundamentals always tell all the story. I think that the price today of a chart knows all the fundamentals. I mean, if you really think about it in math terms, the summation of everything there is going on. It either continues on and that creates a trend up or down, but that's what the market does. So you put that together, I give you what I'm seeing on that, we do this that way. Normally I'd be holding much more in the way of webinars, and that's all my fault, it's nobody's. I have been building my home. I had 3 workers here all day today. I thought I was through, I'm close. But we've redone our home, as so many people are, and I'm one person doing this in this environment. I do have my staff, everybody's remote, and they locked down Chicago today. I don't know if you heard it, but read the national news. We're back into the curfew. We may go to a stage 3, which means shut-ins again. We'll know that. That could happen as early as this weekend. But the COVID has gotten very serious in the city. To get my information, and each video is about 20 minutes long, some 25, and they'll have on the bottom a scroll bar so you can scroll. Let's assume you just want to go to the metals, you want to go to the interest rates, you want to go to the energy sector. Just pull it, it takes you right where you want to be. How do you find out more? Just go to our website. Under the word research, everything you need is right there. I'm Ira Epstein. You have a great day, and I'll see you all tomorrow.